Hello everyone, welcome back to Upside Down Data. Today I want to talk about ADA, what some of our indicators are making of its recent price action, and some things that I'm thinking about as we try to navigate this bear market. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So what I'm showing you right now is the long-term UDPI for ADA. This is our risk indicator we have here on the channel. The long-term version cares about more macro moves, so moves that play out over months. I'm showing you here the price action of ADA across time, color-coded to the output of our risk model. Red is high risk, green is low risk. And what you can see is that the more recent action that ADA put in is we've put in the all-time high, flashed red, high risk, and then we went down, and now we're kind of re-entering some of these lower risk zones down here. It's not entirely dissimilar from what we did back here, kind of touching into the green, bouncing back to yellow, touching green, bouncing back to yellow, for ultimately finding our bottom and then dipping down to these lower risk levels down here. And I think we can see this a bit more clearly if I just show the raw output of the model across time. So UDPI output on the y-axis, x-axis being time. And so the nice thing about ADA being a little bit of an older asset relative to some of the newer altcoins is that it's been through a full-on bear market, right? It's been through the 2018, down all the way to the March 2020 crash. It's been through this entire bear market. And so there's some precedent for how ADA behaves in a bear market that the model is able to look into, is able to read into. This is one of the challenges with younger altcoins is that they've never seen a bear market before, so it's a little bit unknown exactly how they're going to perform. We can have a little bit more confidence in how ADA is going to perform just because we've seen a bear market before. Now, obviously, if we're going into a worse bear market this time, even what happened back here might not be diagnostic, but it certainly lets the model learn from that past behavior. And so what it's doing right now, based on everything it knows about how ADA has performed in previous bear market here, what it's doing is that as we're coming down from the all-time high, risk had been falling, we'll see that risk is actually kind of plateauing here, even as price has been falling. Price has been falling pretty precipitously, but risk has actually been flatlining, which I think is interesting. It means that the model is actually thinking that the risk isn't falling as price has been falling through this point. It thinks that there's still sizable downside potential. Potentially what it's doing here is it's kind of seeing more and more downside being plausible as time is going on, which is why it's not ready yet to flash down into some of these really low risk levels that we've seen in the past at prior kind of bottoming points in more bearish conditions. That's something I'm going to be keeping an eye on. In fact, what we're really doing here is kind of ranging in the same risk levels we ranged in for a lot of the bear market back in 2018 going through, 2019, 2020, kind of this whole range down here. And so really, not to say that this would have to happen, but really it might be the case that we might be paying more attention to these types of levels as being that kind of a special value level. Now, we wouldn't have to go back down there, right? No one knows what's going to happen with crypto or the broader markets. It very well could be that this will end up being the bottom, and we could move back to the upside. I personally am skeptical of that, just as long as the macro picture stays as bearish as it is, with the Fed seeming to be determined to continue tightening monetary conditions to rein in inflation, and seemingly potentially wanting to see risk assets fall further in their price as one of the things they might be looking for to help reduce demand if people feel like they have less funds on hand. It's hard to be especially optimistic, but again, who knows? It's important to keep an open mind, and certainly things can change in an instant. If that happens, this could be a bottom. But I'm really seeing this downside potential as being very realistic here. And I think the model is also seeing that, even as the price is falling, it's not ready yet to really discount its risk level quite yet. It's kind of happy to hang out in this range for now. And then maybe at some point in the future, it'll decide it's ready to start moving down into these lower risk zones where the upside potential has been incredibly lopsided relative to the downside, which is what we've seen at these previous bottoming out levels. As I said, anything can happen, but that might be one thing to watch for in the future. And we can also look across different versions of our UDPIs just to get a little bit of additional information for what's going on right now. So the long term is at negative 2.44. That's what I was just showing you. It's come down pretty notably since, back where we had been just a little bit ago, above, back above -1 last month. And the medium term is actually even lower, negative 3.64. This is sensitive to moves that play out over weeks to months, so a little bit shorter in its focus. And then the short-term UDPI, negative 3.49, so similar to the medium term. So again, saying that in the short term, we're getting relatively oversold potentially. Who knows? Maybe we can see another bounce before. But the thing that's been kind of really oppressive with ADA, we haven't seen many relief rallies at all. The most appreciable one that we've had was this little blip here. That's pretty negligible in the size of things. We haven't really gotten one of these kind of bigger, more plausible, more strong rallies. So something to be watching for sure as we go on. And who knows? Maybe if the short-term UDPI stays this oversold, it might be suggesting that we might see at least some kind of relief in the shorter term coming up. And this is sensitive to moves that play out over days to weeks. So nothing's guaranteed, of course. Certainly it can keep falling further, but something to keep an eye on for sure about what happens with this, if maybe some short-term upside might be plausible. And one of the things that can give us some warning about maybe when one of those bounces might be more likely than not is another indicator that we like to watch here at the channel that we have. This is a trend confidence indicator, which is another model that we in-house model we have here at Upside Down Data. So the way that this works, if you're not familiar, is essentially it looks at whatever trend the given asset is currently in, so an uptrend or a downtrend, and then it's trying to say whether or not we should be confident in that trend. So essentially, if you're in an uptrend and the TCI is green, that's good, because you can be relatively confident in that trend. But if the TCI is, or excuse me, if the trend is up, but then the TCI flips red, like what happened through here, that means that trend is weakening or likely to reverse sometime in the near future. So, green all the way through the run-up, flipped red as we kind of just range sideways from here. Green again as we went to put up, that what was the all-time high, back down to the reds going to the summer. Green going up to put in the actual all-time high, back red, and then flipping green for a couple of these little bounces that we've had along the way, but largely kind of hanging out more in the red than the green throughout this whole downtrend. So, sniffing out some of these shorter term uptrends, but largely kind of maintaining this more bearish posture below zero, being the dividing line between bearishness and bullishness. And right now we're quite far in the reds right now. And one of the useful things about this model is we can actually probe it to ask it, what price level is it watching to get more bullish on the asset, to kind of flip green. And it's basically demanding that ADA show strength enough to reclaim the 72-cent level right now. Now, this is a dynamic level. This will be changing constantly. And so if we start consolidating down here, this very well could come down to meet it, that it wouldn't require as much strength before it starts getting more bullish again on ADA. But this is the critical level it's watching right now. And so that's where, really anything below that, for now, I'm just kind of seeing as noise to some degree. That, it's unless we can clear up through that level, this model doesn't think there's any special reason to think that a reversal is really at hand. And even if we bounce a little bit, it's more likely that downside is plausible or following than any kind of move to the upside. But certainly if we continue to build support down here, this could come significantly lower, and who knows, maybe we could flip green back up. Again, I think that's going to be really dependent on macro conditions. If those start improving, there becomes more of a risk on appetite in the markets that could allow, ADA, maybe after building up some support, just to be able to start splitting back up to the upside. So I'm just going to be watching this and what it does. We did put in kind of a bottom down here. We moved back up. If this starts trending back up, that would be kind of an early potential sign that a reversal could be coming. That tends to happen in these situations, where you'll put in a bottom and then you can actually get these divergences where price is falling but the TCI is rising. That can be an early sign that maybe a flip is on the horizon. Something to keep an eye on. That was something I'm going to definitely be keeping an eye on. Okay, so let's also talk a little bit, though, about just some other things I'm thinking about with ADA beyond just our indicators and what they're saying. So one of the things that I always like to look at with any asset, just to get an idea of different levels to watch in corrections, but also, in rallies below the all-time high, it's just looking at the volume profile that's transacted in a given range. And so here, I'm really looking back from December of 2020 all the way through where we are today, just looking at where the predominance of volume has transacted. And what you'll see is that we're kind of in this gulf right now where there had been a lot of value transacted right up around, the $1.10, $1.20 range, because we spent so much time in there back, through spring and summer of 21, but then also again back late last year and early this year before moving back below it. And there's really not a whole lot of volume that transacted in between until we get to this level back here, where a lot of volume changed hand back here in early January, or in January of 21. And the reason why looking at volume is useful is it can give some idea of where resistance and support levels might be. The idea being if a lot of volume transacted at a certain place, there might be a lot of people who have their cost bases around that point. And we know that people tend to really pay attention as an asset's price gets near their cost basis. If it's falling towards it, they might step in to defend it. If it's rising back towards their cost basis, they might end up selling out at that level to recoup their investment. If they're, concerned that the asset's just going to fall back down. In a bear market, it's certainly plausible that should we rally back up to some of these zones up here, that could be a lot of resistance unless there's a lot of new energy entering into the market to let us slice up through there. So it'll be interesting to watch these kind of levels. So this is a logarithmic chart. That's why this is a little bit distorted. But, there's a lot of value that's been transacted in the 30 to kind of 20 cent range. Then also a lot of value below, or a lot of volume below that. So that might be why we kind of wick down to around that level and then suddenly we bounce back. Not to say we won't be able to break through this support if we were to go back and test it in a broader sell-off if that were to happen. But right now we're kind of consolidating still in no man's land here to some degree. Be interesting to watch and see what happens. Now, there's a lot of bearishness out in the market and bearishness about ADA and frankly the rest of the crypto market. And I think there are a lot of reasons to be cautious with the broader macro picture. But I do just want to kind of talk about maybe some other things to think about in the bigger picture as we kind of continue to navigate in this bear market. So with ADA, there are a couple things that I think are encouraging given what's been going on so far. So the first thing that's encouraging is that ADA has been holding up surprisingly well in terms of its market cap relative to a lot of other altcoins, right? We can see that really only XRP, BNB, and then of course Ethereum, if you still consider Ethereum to be an altcoin. Arguably, I would say Ethereum, it's kind of its own thing now. BNB and XRP are probably the two altcoins on this list that are above Cardano. That's not too bad, right? That's not bad at all. Cardano's sitting at 17 billion market cap. It's actually above Solana now, which hadn't been the case for a long time. Solana had been sitting well above Cardano at different points back through the last year. And the reason why this is encouraging is that you can just compare this with some of the other kind of hot names from, the fall rally or coming out of the summer. Avalanche had really shot up through the rankings. Polygon had its moments. Some of these other names that had been well up here on the charts that have now fallen back down quite substantially. Cardano has been able to maintain its market share. So for someone who's an ADA bull, that's certainly something that's encouraging, has been able to hold up as well as it has, while so much else has really been capitulating. Not to say that's going to have to stay that way, but certainly, a hopeful sign that people haven't been dumping out of Cardano maybe as quickly as some of the other ones. It's been able to keep its market share quite high relative to some of the other ones, which had been above it before. And the other thing that's important to note about a bear market is that, a lot of the kind of negative sentiment about ADA throughout this whole, past, really ever since its all-time high, was that a lot of people just believe that Cardano is moving too slowly to be competitive with other layer ones, that they're taking too much time to, at first it was too much time to deploy smart contracts. Now it's too long for them to roll out their ecosystem, that everything is just too slow, and that in the crypto market where things have been moving so fast, that they're just going to fall too far behind, that other chains are going to suck up all the market share, and it's going to be lights out for ADA or for Cardano, over time. But one of the things that's important to remember about a bear market is that suddenly the shift is less about kind of hype and being able to grab people's attention and getting all the value pulled into your system that way. It's more about actually building something that's viable, building something that's worthwhile in the long term. People say bear markets are for building, and in crypto. And I think what we can look for then potentially is that maybe this just gives ADA more time. If we're gonna be entering a more protracted bear market, then the hype kind of issue of grabbing attention maybe matters less than the fundamental values. And with ADA, if it's able to build its fundamentals, really kind of realize some of its plans, with some of its scaling solutions that they have planned, and then frankly just building out its ecosystem, working out all the kinks there, by the time the next bull market runs around or comes around, it could be that Cardano will be in a much stronger position and actually very competitive with things that people have been arguing that's currently fallen behind on. You know, by then, if it has a lot of its scaling solutions implemented, it could have way higher throughput and be a lot more competitive on some of those fronts than it is right now with some of the other layer 1 blockchains that currently have higher throughput. And so that's just one other thing to think about, right? And certainly Cardano has no shortage of development that's going on with it. You know, it's got tons of different decentralized applications and different tokens that are being deployed on it. And so one way that you can view this is that, you know, assuming Cardano or this bear market isn't too bleak, or that there isn't some other reason why Cardano gets hit too hard so that it kind of falls too far to still be on people's radar. If it's still able to hold up reasonably well through this bear market, it might just be kind of given the time to start really appreciating. And frankly, you know, in the long term, it might actually end up doing better this way than if the crypto market had just ripped from here, where maybe the more flashy names would have sucked all the liquidity out and Cardano would have been left flagging behind and kind of gotten forgotten, you know, considered kind of a quote-unquote boomer coin that people have talked about some of these versus some of the younger coins that were coming up for. So just something to keep in mind, something to think about, that, you know, bear markets are for building, and if a lot of building can actually happen on Cardano, that might set it up especially well for the next bull run, and especially better off than some other chains which had hot moments but maybe don't have as much active development on them, which might not be as in as good of a place come the next bull cycle. So certainly I think there's a lot of reason to be kind of short to medium term cautious on ADA and Cardano. And then in the long term, I think it really depends what they're able to build during the bear market. And if they can really start realizing a lot of that potential that a lot of people see in Cardano, maybe then it would have a bright future at that point. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.